it's actually an opportunity for people who haven't bought yet if prices go down. But there are several months now, there have been talk of a weakening of the market, and I'm taking that seriously. But in most cities, our own S&P CoreLogic Case-Shiller numbers are still going up. That doesn't mean that it isn't a good warning. The housing market, when it starts to slow, that's a leading indicator that it could turn down. It's different from the stock market in that sense.
Right.
But it hasn't. Notably, Seattle has been falling. But it is possible. I've described the current boom in U.S. home prices as the third largest boom since 1890. So it's big, and people are starting to think that housing is expensive, and that could lead to a turnaround and a drop in home prices. But I don't know. I'm not ready to forecast that yet. The NAHB numbers have been their members' assessment of housing market strength was declining for a number of months. Then it turned up a little with the latest data, but not much. It leaves you in just some doubt where we're going.
So let me get this straight. So sales of new homes were weak, but overall the market is still healthy. For instance, the Case-Shiller index, which reflects a variety of factors, pricing, for instance, is still strong. Is that right?
The Case-Shiller index is existing houses.
Mm-hmm.
It's a repeat sale index, so we look at changes in price of the same house. So new houses are not as good a number. I'm selling my index.
That's all right.
The new houses reflect the size and quality of whatever they're building now. And also new houses tend to be built out in places where there's more land, like in the periphery, where they can build them. So if you have a home in an established neighborhood, the new home prices, it's somewhat of an indicator but it's not that good an indicator of your home price value.
Okay. Let's talk about the economy generally speaking, though. I'd like to ask you what your take is on the economy going into 2019 and whether you think that we're at risk of entering a recession.
We are always at risk of entering a recession.
Fair enough.
But I think that the thing that jumps out at me is that after June, well, as of June of this year, a few months from now, the expansion will be tied for the longest expansion. It will have been a full 10 years, 120 months. And so the last time it did that was in the late 1990s until 2003, I'm sorry. So it suggests to many people that it's about time for a correction in the housing market.
But a recession wouldn't just die of old age. I mean, excuse me, an expanding economy wouldn't just die of old age. You'd need factors to cause a contraction. So what might those be?
Well, the factors are often changes in confidence. If you look at interest rates, they're not that reliable in predicting. I know we're talking about raising interest rates. Actually, the news that we will raise interest rate has weakened now in recent months. But even so, interest rates haven't historically been that well. The housing market is remarkably trendy, and it goes up and down, especially in the last 50 years. It goes up smoothly for a while. It's because it's not tradable. It's not as easily tradable. So you don't have the smart money going in and out from day to day. So it shows momentum, and that momentum is slowing down a bit. So there could be a reversal in home prices and a recession. But I'm not giving it a probability of greater than 50% for this year.
Okay. Let me ask you about President Trump's policies, specifically deregulation and tax cuts. We've seen that already. Some would say that's already baked in to the economy. Does that make comparisons going forward that much more difficult?
Or they'll say discounted in today's price.
Yes.
Yeah, I think the question is whether he can think of more stimuli to housing. But Trump's tax law wasn't that sympathetic to it actually was probably against, although they didn't take away the home interest deduction, they raised the standard deduction, so it made the home interest deduction less valuable. So it's not, he has not worked to support the housing market. But I think Trump does have a psychological boost for the housing market because of who he is and what he kind of exemplifies lavish living. And he writes books about success. He's our first motivational speaker president. And his motivation, it will tell you, I think, that you have to live the life of a successful person, and then you will be seen as successful, and maybe it will happen.
And that would include buying a new home, perhaps.
That's an important reason why people buy homes. They want to be part of the successful people in the country.
That's fascinating. Let me ask you about President Trump's nemesis, perhaps, which is Fed Chairman Powell. They've had a debate, not directly, but indirectly, about interest rates. Who do you think is right? Is Donald Trump correct in saying that that rates shouldn't go up at all? Or
well, I think that Trump making it one man against the other is a little bit misleading because the whole board voted for the recent policies. So it's not just Trump. It's not just Powell. Powell is expressing a view which is pretty standard. Janet Yellen would probably agree that it's important to get interest rates back to normal. The real interest rate, if you subtract inflation, is still not much above zero on the short end. So it's important for them. I think it's almost a step toward normalcy that we expect to get back, and it will be a sign that things are back to normal. But under the present circumstance, with some signs of weakness, yeah, they still raised rates, but they have taken back their forecast for further rates in 2019.
so you think this is a prudent course?
I think that Powell is pretty good, yeah, and he's expressing his independence. He's not caving in to the president, which he should not. That was the whole idea of an independent central bank.
Right. Switching gears a little bit, Bob, what do you think the mood is like here this year in Davos? You've been, I think you said, since 2003 every year, right?
Yeah.
Is it different? Are people more hopeful, maybe more concerned?
Well, one thing that strikes me is that the opposition has changed. When I came to Davos, there were left-wing radicals out in the streets carrying posters. And now it's we don't see anyone protesting out there now, but if there were protesters, it would be right-wing people. So there's a little bit of concern now that Davos is looking like a bastion of wealth and privilege at a time when a lot of the concerns of people are that the middle class is being left, or the broad middle class, which is most people, I think, is being left behind. And that's what Trump argued. His tariff policy is supposed to help people find jobs that are good jobs, great jobs. But Trump is not, he's not synonymous with Davos, to put it lightly.